12.8 billion rand going through the market, and of course the JSE appearing to track the downturn in the markets today, and resources really being hit by concerns around Chinese growth. What's your view on the fact that we had this pause in the market mood today?
It's hard to say. I think in the short term, I think that we have to bear in mind that the year-to-date rally, I think, in markets have been very impressive, and I would probably say it probably has gone, I think, slightly further than what most people would have thought a couple of weeks ago. So we probably can't complain too much, just being down just over 1% or just under 1% on a one-day basis. But you are right. I think the comments this morning from BHP Billiton, where they stated that they do see a slight slowdown in China, that they are maybe slightly more cautious short term, and that steel intensity might have peaked in China, did certainly spook, I think, quite a few people. I think it's also quite interesting in that BHP is probably the one mining company that has always been, I think, slightly more cautious the last couple of months. You know, they normally have a very balanced view of the market, whereas many other mining companies are very front foot and very bullish always. So BHP normally has a very good feel. They are very large, very diversified, and the market tends to almost hang on every word what they're saying. I certainly don't think it's an all fall down scenario, but you know, we do have to be fairly cognizant that that if BHP says things aren't all that well, normally there's some form of truth to it.
But as you say, just a flattening out in demand as opposed to a sharp correction in growth, and they're still looking to invest. So a sign that things are slowing down, but as we say, we already knew this about China, that it would be coming below trend growth this year.
Yes, definitely. You know, I think that, you know, the long-term structural story in China remains intact. I don't think the commodity bull market or cycle is completely over yet. What I would say though is that I think the current level of commodity prices is certainly pricing in a much better outlook for the global economy as a whole. I mean, if you had to compare the prices of, say, copper, nickel, iron ore, etc. now versus the fourth quarter of last year, we have certainly seen major rallies across the board, and you know, that is not only because of China but also because of you know, the whole European banking sector certainly looks a lot healthier than what it did this time, or like in the fourth quarter. Economic prospects in like the US is also looking up, but no, like as I said, I don't think things are necessarily as cheap as what they are used to be, and maybe it is just, I think, maybe a short-term blip. What is a little bit worrying is that I think that the housing market in China is showing signs of weakness. I saw a fairly alarming statistic about a week or so ago, in that they tracked the property prices in 70 of China's largest cities, and in 40 of the cities you are seeing falling prices, and generally speaking, that is not a very good sign for that economy. So I think there's quite a few question marks that investors have, perhaps just in the short term.
There's, as you say, we've got concerns around the property market in China, but at the same time you've got Anglo American highlighting the fact that it's on the lookout for value-adding iron ore opportunities in Australia and Africa. What are your thoughts, though, on the price that Anglo's closed at today? It was down by 3.9% and sitting at around 303 Rand, just above 300 Rand.
Look, Anglo certainly, I suppose, relative to the rest of our market, hasn't been a great performer. It has certainly lagged. I think it had a very good rally in the month of January and early Feb, but since then, I think relative to financials as well as industrial companies, it has certainly underperformed, mainly because of this whole China issue. You know, if I look at the valuation of the company, I would probably say that Anglo is probably one of the better valued companies, or one of the cheaper companies in our market. You know, the PE multiple is relatively low, and I think if you had to strip out the iron ore assets and strip out the platinum assets, it looks even, I think certainly looks even cheaper. However, if you are concerned about China, and if BHP Billiton is correct in that you would see or will see a slight slowdown, I think in the short term, I think what will probably happen is that it'll probably be very difficult for Anglo American to outperform, because I think that the level of commodity prices will probably start coming off. and generally in that environment, it's hard to see the price of a a producer like Anglo's to actually go up. However, longer term, closer to 300 Rand, if you are a believer in the long-term structural story, I don't think the share is expensive, and you should probably be taking a closer look at it.
Do you have any views on the construction space right now? We had PPC getting the green light yesterday to acquire Pronto Holdings, and of course that a player in the cement space and getting access to cement supply in Gauteng here in South Africa. But overall, though, we've got Basil Reid's results also expected out on Thursday. Do you have any exposure to construction right now? Are you calling a bottom, or any thoughts that you'd like to share on that sector?
Look, it's a sector that we don't really have exposure to. We tend to be relatively underweight. I definitely think that the sector has perhaps seen the worst. It certainly has been a very difficult time the last, say, 2.5 years or so, after an amazing run in that industry from about 2005 to 2007. My general feeling is that it's probably a little bit too early, because I still think that the pricing environment is very competitive. I think margins are being signed at very low levels, which does remove some of the safety element to an investor, and I think there's still a fair amount of overcapacity, and I think that'll probably take another year or two to actually be removed out of the system. I think pricing power does not lie with the construction company still. I think it lies with the client. And if I look at the valuation, no, they are certainly not expensive, but I think earnings momentum or earnings expectations are probably, I think, in the short term still a little bit too high. But having said that, they have done very badly. I know that there's a fair amount of excitement about the potential government infrastructure rollout. I do think that eventually that most likely will happen, but in the short term, I think investors will probably have to wait. So I think it's going to be another fairly disappointing earnings season. Some of the companies have already seen major declines in earnings, and that might have come to an end now, but I think there are probably slightly more interesting areas of the market other than the construction sector.
Rhynhardt, thank you very much for that. Not calling a bottom anytime soon, clearly 1 to 2 years before you're looking to perhaps start picking up those stocks. Rhynhardt Roodt joining us from our Cape Town studios, equity analyst at Investec Asset Management.